Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Treasury yields slide and the yen gains after data showing a U.S. labor market slowdown backs the case for supersized Fed rate cuts. Bloomberg understands OPEC Plus is close to agreeing on a delay to a planned output hike after a price slump this week. Plus, President Xi Jinping lays out his vision for ties with Africa, promising $50 billion in financial support, military assistance, and market access. Good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Let's get you up to speed on some of these markets because we are seeing somewhat of a stabilization come through. Yesterday, the S&P and NASDAQ closed mildly weaker, but still does tell you that after the gyrations of the prior days, that a little bit of stabilization has come through, despite the fact that NVIDIA is down 11% in 2 days of trade. A lot of focus on some of the data that's come through. JOLTS openings dropping to lows not seen since 2021. And that catapulted these markets, the rates markets, a lot lower. You can see the 10-year Treasury yield is trading at 3.76, rallied about 8 basis points in yesterday's trades. The market is pricing in more than 105 basis points of rate cuts by year end. So again, the market is building up its expectations of what is to come out of the Fed in coming meetings. Some of them, some people, some analysts out there are anticipating a 50 basis point cut. Futures leaning slightly towards negative, down about 0.1%, but the handover from Asia more positive. Asia Pacific equities up 0.1%, and then Brent now sitting at around 72.85, so $72 is the handle. Stabilization is the theme today, but of course the complex is down more than 8% in the last couple of days, and we have put out a story, Bloomberg had put out a story overnight. According to our reporting, OPEC Plus are now considering pausing putting extra barrels back to the market, at least for the month of October. We'll talk more about that on the show. Quickly, let me just show you those JOLTS opening numbers because they did drive the market lower yesterday. And this is what you're getting. If you look at some of this data, the number of layoffs has risen, indicating weaker demand for workers. But the headline figure has shown a drop not seen since the beginning of 2021. So we're back to levels not seen since January 2021. And all of this, of course, is set up into those jobs figures tomorrow, going to be key for market direction. But let's branch out the discussion and take a look at how some of these Asian markets are faring. Avril Hong is in our Singapore studio, standing by. Avril.
Yeah, Jumana, we're seeing Asia's stock gauge pairing the gains from earlier on in the session. And this is, of course, a gauge that slumped well over 2% just a day ago. Really steep selling. And so I think the rebound that we're seeing very slightly maybe points to stabilization, as you alluded to, but it's not quite recouping all of those losses. If you think about it, how the chip stocks was dragging the indices down just a day ago, we are seeing a bit of a recovery in Taiwan, as well as South Korean chip-making names, but not quite the case for chip-related stocks in Japan. They're extending declines. There's an added complication for Japanese equities given the rally in the yen just a day ago following the softer dollar after the U.S. job openings numbers. We also had some data out of Japan today. Labor cash earnings rose more than expected, and the yen extended gains initially. I think it's back to a bit of that weakness now, hovering closer towards the 144 level. Jumana.
Avril, thank you so much. And we are going to be talking more about some of these Japanese market developments later on in this show. But for now, let's just recap some of the news that we got out of the U.S. yesterday. The slowdown in U.S. job openings has bolstered bets on steep rate cuts by the Fed. The U.S. Treasury yield curve briefly turned positive, with the U.S. 2-year notes yield dipping below the 10-year for only the second time since 2022. So brief disinversion moment. So let's bring in Altaf Kassam, MD and head of EMEA Investment Strategy and Research of State Street Global Advisors. Good to talk to you, Altaf. Maybe let's just start with the price action that we had in fixed income yesterday. Big rally in these 10-year notes. I was surprised to see it go as much as 8 basis points lower just on these JOLTS figures. What scenario do you think fixed income is priced for right now?
I think the problem for the market at the moment is that every single data point is being scrutinized, and no data point is 100% reliable, especially those that rely on surveys, which are becoming a lot more spotty in terms of respondents. So the market is moving around a lot, and you're right, an 8 basis points rally in the 10-year is a big move. And what we would like to see is more of a trend in the data before we start pronouncing whether the Fed is going to cut 50 basis points or not. So unfortunately, with the Fed being especially data dependent, we're going to see these kind of moves and this kind of volatility. And we may see repeats of the events of the last few weeks where markets move a huge amount on very little data.
Altaf, which camp are you in? The soft landing camp or hard landing camp? I mean, again, it's difficult because we're all sitting there piecing the data together. But I feel more and more people are coming around to the view that this may not be a soft landing after all.
We're definitely still in the soft landing camp, and that is still our base case. We still think that inflation will return to target, which seems to be something that's becoming more and more of a consensus view. And we don't think that unemployment will spike. So we don't think that the labor market will suffer. So we do think that the Fed has just about got it right. They moved too late, but we think that with a couple of 25 basis points moves, followed by a 50 basis point move in December, they should be able to keep this soft landing on track. So that's still our base case. Clearly, there are risks, and we're watching out, especially for weakness in the labor market, which has become the Fed's primary concern. But for now, we still think the soft landing is the most likely outcome.
Let's talk about some of the price action we've had in global markets the last couple of days, and indeed at the beginning of August as well. I just wonder if central banks telling us that they're going to be more data dependent means that we should expect more bouts of volatility like this, simply because the markets tend to overreact to every individual single data point.
Yep, we've been telling our clients for a long time to stop dreaming of the quiet life. The era of the great moderation which prevailed with quantitative easing after the global financial crisis is over. Central banks, and especially the Fed, which is the most important central bank in the world, have told us that they're going to be data dependent. They're going to scrutinize every data point. But the problem is that the data has become less reliable. Like I said, survey rates are dropping, revisions are increasing. So it becomes harder and harder for the market to form a view, and we will continue to see volatility, as you say.
We were talking, my colleague and I were talking about some of the price action in the yen overnight as well. Clearly still a big focus for the global investment community. When you talk about the direction of dollar yen, a lot of that is dependent on what happens with these labor figures as well. To your mind, are we likely to get a repeat of what we saw at the beginning of August, and that so many of these carry trades were rinsed and that had knock-on effects on broader markets? Is that why the investment community cares so much still about what's happening in Japan?
We care about Japan for a number of reasons, but if we focus just on the yen carry trade, what we're seeing from our flows and our holdings data is that real money investors have actually gone the other way on the yen. They're actually long the yen. And fast money investors, or hedge funds, if you like, are actually flat in the carry trade. So we think the risk of other more huge moves in the yen sparked by leveraged holdings in short yen, long dollar, for example, are not going to be repeated. What we do see is a shift of that carry trade from the yen now to the Swissy. So that's another currency that we're looking out for. But generally, we don't think those kind of moves are going to be repeated. They were a function of fragility in the market, low liquidity, and these big leverage positions, which we think have pretty much been flattened by now.
Yeah, and more broadly, when you're thinking about the direction of currencies ahead, it feels as though it's somewhat of a competition in the rate cutting cycle. Yesterday, for example, Bank of Canada cutting its third consecutive time in a row. The Fed are about to start their rate cutting cycle. ECB likely to cut again in September. So all of these central banks are moving towards a global easing cycle. Does the winner in currency space depend on who cuts the least throughout the cycle? Is that how you're thinking about it, very simply?
I mean, the magnitude of rate cuts is obviously very important. But really, for the dollar, there's a number of factors. There's the Fed starting to cut rates and how they signal their trajectory over the next few months. But there's also worries around geopolitical risk, which will tend to drive flows into the dollar. There's the continued exceptionalism of the US economy and capital markets, which again support the dollar. So the dollar has a number of things going for it, which other currencies don't. So it's not just all about the number of rate cuts, but clearly for currencies outside the dollar, that's important. Bank of Japan is an outlier. As you say, the ECB, Bank of England have moved early.
Yeah. Altaf, it's always good to chat to you. Thanks for getting up early for us. Altaf Kassam, MD and head of EMEA Investment Strategy and Research at State Street Global Advisors. Now for a look at some of the other stories we're following today. NVIDIA shares fell for a third session in New York, now down around 14% since last week's earnings outlook disappointed investors. Meanwhile, the company says it is in contact with the U.S. Justice Department, but it has not been subpoenaed. That's in response to information from Bloomberg sources saying that the DOJ had served subpoenas as part of an antitrust investigation. Coming up, OPEC Plus crude production is in focus. We discuss the factors prompting a rethink amongst the members. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. OPEC Plus delegates have told Bloomberg that they are close to an agreement on delaying a planned increase in oil production. That is after Brent crude prices slumped this week to late 2023 lows off the back of downbeat economic data from China and the U.S. So for more, let's bring in Anthony DePaula, Bloomberg's Middle East energy markets reporter. We had been speculating yesterday as to how OPEC Plus might respond to these plunge in oil prices. And now, according to our reporting, it seems like a pause in terms of those plans of bringing extra barrels back to the market could be in sight.
Yeah, good morning. That's right. It was a real roller coaster yesterday with speculation building towards the end of the day that OPEC would go ahead, OPEC Plus would go ahead and pause this bringing back of oil into the market. Remember, that's voluntary cuts that a number of OPEC Plus countries have made to take extra oil out of the market. They were supposed to start unwinding those cuts at the beginning of October and gradually bring that oil back. Now, that had a lot of analysts, a lot of investors and traders spooked as well, because it looked like that was going to push the market into into surplus already by the end of this year, and then create an even bigger surplus next year. Even without those that increase in production, we're probably looking at a surplus next year anyway. So things are looking difficult for the oil market because of that demand issue. But now, mainly because of that demand issue, because of that softness in the market now, we do understand that these OPEC Plus members are discussing delaying those cuts. We're still waiting for official confirmation, which would likely come from those individual countries as they talk about their voluntary cuts.
But it's not just about the announcement, it's also about compliance within OPEC Plus too, because they can put out these big statements, but we know that there are some countries like Iraq and Kazakhstan that continue to produce more than their stated quota. Shouldn't that also be a focus for OPEC Plus as well? Yeah,
for sure that's a focus, but they have so far been unable to deal with it. So there have been many discussions, lots of going over to Baghdad and bringing ministers around and talking to people and having stern conversations. And then those countries come out with statements saying that we will comply and we're going to do some extra cuts. They said they're going to cut more than they would in a given month to make up for past overproduction. But every month we still see them producing higher than their actual target. So not only are they not meeting the quota, but those additional cuts are not happening. So that is a problem.
The compensation isn't happening.
That's right.
What is the latest out of Libya? Yesterday, it seemed as though, based on an interview that Bloomberg did with the central bank governor, former central bank governor, that a possible solution was in sight between the warring factions. What's the latest there?
Yeah, I mean, this is going to be a political solution. So these parties are going to have to come together and discuss that. For oil markets, the crux of that is if they do resolve this political issue around the central bank, then potentially they get the oil markets, the oil production and the exports back on. We've really seen a decrease in the exports coming out, so those are slowing to a trickle, kind of around one tanker a day, if that, as kind of the storage runs out at the ports there. So without production coming through, there's going to be less there's going to be no oil for them to load. So we're seeing that really reducing there. But the Libyans, of course, want to get that central bank issue resolved and want to get that oil back on the market so they can get those revenues.
Yeah, you're talking about 1 million barrels per day.
That's
right. Decent number. Anthony, thank you so much. Anthony DePaula, Bloomberg's Middle East energy markets reporter. Well, ADNOC has raised $4 billion from a bond market debut. Abu Dhabi's main oil producer priced $3 bonds and now joins a global rush of debt issuance as companies look to lock in favorable borrowing costs. The debt sale comes amid a big drop in global oil prices. And Israel's strategic affairs minister says the government is open to negotiating control of Gaza's border with Egypt once the war with Hamas ends. Ron Dermer told Surveillance Israel still has red lines on security when it comes to a ceasefire agreement.
Believe me, Israel's government wants to get to a deal. What we're not willing to do is go to a deal that's going to endanger the security of 10 million Israelis. But we're willing to do a deal, and we hope we can get there as soon as possible.
For more on this, Dubai's bureau chief, Dana Khresh, joins us now. Again, even though we saw these demonstrations of the weekend in Israel, a lot of pressure on Netanyahu and his government, it feels as though the messaging that we've heard the last couple of days is that they're going to stand put on maintaining the Israeli presence on the Philadelphia corridor.
Right. So we saw the Israeli minister Dermer on Bloomberg TV yesterday, and also Netanyahu later that day, doubling down on their refusal to retreat from the Philadelphia corridor and saying that they would not agree to that until the end of the war, which seems very unlikely, very unforeseeable. And they said that they would not withdraw even in the first phase of that ceasefire agreement. Of course, the first phase pictures a 42-day of a temporary ceasefire and a truce. So we're seeing Netanyahu very defiant in the face of all demands, especially Israeli demands to bring back the hostages, the Israeli citizens, and of course the protests that we saw. And of course, this is receiving heavy criticism from Arab and Gulf states. We saw yesterday in the past couple of days, Qatar, Egypt, Saudi Arabia, the UAE, Jordan, these are the heavyweights of the region, criticizing Netanyahu's comments from earlier this week on the Philadelphia corridor and actually expressing what they said is solidarity with Egypt. Egypt has denied all allegations that they are allowing Hamas to smuggle weapons through that border, and they're saying that Netanyahu is trying to distract his own audience from the main issue, and that is him, and they're accusing him of obstructing these ceasefire talks.
Yeah, it's interesting to go back to that surveillance interview. What Dermer said is he doesn't question the Egyptian security intentions, but he does question the results, and that was coming from him directly. But is it just about the Philadelphia corridor? Is that the only issue that is holding up these ceasefire discussions, the progress in ceasefire discussions?
No, it seems that from our own reporting today and the media reports we've seen in the past couple of days, that the demand for Palestinian prisoners, the number of Palestinian prisoners that Hamas want released during the first phase, is becoming an issue, and this is just as difficult to resolve, it seems. Hamas has in the most recent round of talks demanded an increase to the number of Palestinian prisoners who Israeli holds or detains, and they're asking for more, and that's something Israel doesn't seem to be willing to actually agree to. And this is getting more difficult, especially after the killing of the 6 hostages over the weekend, and this is still overshadowing the whole ceasefire talks. So very unlikely to reach an agreement and very unlikely to have anything in the next couple of weeks.
Dana, thank you very much for bringing us the latest. Dubai's bureau chief, Dana Khresh. Well, coming up, we will hear from the IMF Saudi Mission Chief about growth projections for the kingdom. Next, this is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersechi in Dubai. Let's turn to Saudi Arabia, where the IMF says it sees a strong economic outlook and robust non-oil growth. However, with declining oil prices and rising imports, the fund also expects the kingdom's current account balance to flip into deficit this year and next. I spoke to the Saudi Mission Chief, Amine Mati, about their latest report.
If oil production were to decrease and then the export proceeds were to decrease consequently, we will have a current account deficit that will be significantly lower. We are this year projecting a modest deficit of about 0.1, over the medium term about 2 and 2.5% of GDP. But what's important to remember is that reserves remain ample. You have 445 billion in net foreign assets, $445 billion in net foreign assets in 2024 as of May, June, then was slightly lower. That's more than 200% in terms of the reserve adequacy metric for the IMF. It's more than 15 months in import cover. Adjustment will have to be made probably on the fiscal and others if the deficit becomes too large, but the reserves are quite ample, and we think that at this stage we are comfortable with where we are on our forecast.
Yeah, well, you spent a good chunk of the report talking about Saudi Arabia's diversification efforts. You talk about non-oil growth of 4.4% next year. I just wonder whether you think the 2030 revenue target of 1 trillion Saudi riyals is still actually achievable with the momentum in place.
You're talking about non-oil revenue?
Yes.
Yeah, on non-oil revenue, and this is, if you look at our fiscal deficit and our fiscal PAT, you will find that, we are projecting a overall deficit of about 3% of GDP. And this is within the assumption that non-oil revenue mobilization remains relatively constant. To reach a higher number and to increase that ratio, what we are recommending is that there are measures that can be taken both on the tax front and on the tax revenue administration front to improve compliance and others. And if you look at the report, there's been quite an improvement on non-oil revenue mobilization. Saudi Arabia has doubled its non-oil revenue mobilization over the past 4 years. There's still a tax gap of about 9-10% of GDP. To fill it, there's quite a lot of room on a number of taxes. For example, property taxes are not existent. If you compare to other advanced economies, that could bring you an additional 2% of GDP.
That was Amine Mati, IMF Saudi Mission Chief, talking through their latest report, the Article 4 report on Saudi's economy. So interesting to see a relatively bullish outlook despite some of the price moves that we've been seeing in the price of oil. And speaking of, let's take a quick look at markets as we head to the break. We are pointing to yet another weak session for S&P futures, NASDAQ and the Euro stocks, all leaning towards the red. Coming up, we discuss the government shakeup in Ukraine, the biggest since Russia's invasion in 2022. The details next. This is Bloomberg. This is Horizon's Middle East and Africa, our top stories this morning. Treasury yields slide and the yen gains after data showing a U.S. labor market slowdown backs the case for supersized Fed rate cuts. Bloomberg understands that OPEC Plus is close to agreeing on a delay to a planned output hike after a price slump this week. Plus, President Xi Jinping lays out his vision for ties with Africa, promising $50 billion in financial support, military assistance, and market access. It has just gone 8:30 a.m. across the Emirates. I'm Jemana Bersachi in Dubai. Let's get you up to speed on how some of these markets are faring. A lot of scrutiny yesterday on that JOLTS data that came through, indicating some further weakness coming through in the labor market. And of course, the big event is going to be the jobs numbers, those NFP figures coming through tomorrow, which will be yet another catalyst for these markets. But what we are seeing is some form of stabilization come through after that major pullback that we had 2 days ago. Yesterday, S&P, NASDAQ ended slightly in the red, but again, just a couple of basis points or so, and not as significant as the pullback we had the prior days. Even though NVIDIA, that stock, is down 11% in the last 2 sessions. So today we've got S&P futures leaning leaning towards the red, down about 0.1%. The 10-year yield in focus yesterday. After those JOLTS numbers came through, we rallied 8 basis points, now sitting at 3.76. The market pricing in more and more rate cuts for the year. We're sitting at around 107 basis points now by the end of 2024. Asia Pacific overnight equities, again, we spoke about this stabilization, but things are somewhat moderating in terms of the outlook there. Asia Pacific equities trading slightly in the green, up 4 basis points. And then oil also in focus. Brent still sitting very close to $70. 72 handle is where we are right now. It's up 0.3%. As this Bloomberg story came out yesterday, we have been reporting that OPEC Plus may consider pausing the increase in barrels that were poised to come through in the fourth quarter. So again, this has provided some form of support to the oil market, but some of the other drivers, including demand concerns, continue to weigh. Switching over just to show you very quickly these JOLTS openings and why they were so significant for market. These figures are showing that the job openings in the U.S. have now dropped to the lowest level since 2021. So softness coming through in the U.S. labor market. All right, let's switch over and talk more about what has been happening in Asia. Avril Hong is in our Singapore studio standing by. Avril.
Yeah, Joanna, let's focus on what's happening in Japan because equities there not quite partaking in a bit of a rebound we're seeing from the likes of South Korea or Taiwan, for example, from the steep selling just a day ago. The chip stocks in Japan are extending those declines today, and there's this added layer of uncertainty, right, for Japanese equities, given what we're seeing in the Japanese currency. Today, we saw it extending some gains after data that showed the labor cash earnings rose more than expected, cementing the case for another BOJ rate hike. But also some mixed signaling perhaps from the BOJ board member Takata, as he said yes, echoing the BOJ governor written statement earlier in the week that they will hike if the data justifies it, but also that they're watching the markets with a high sense of urgency. And amid those comments, we're seeing the dollar yen fluctuating around the 143.7 handle. This is what we're seeing across assets in Japan, Jumana.
Excellent, Avril. Nice setup for our next guest. Real wages in Japan have risen for a second consecutive month, keeping the central bank on track for another potential rate hike this year. Let's discuss how this impacts Japan's financial markets with Hiromi Ishihara, head of equity investment at Amundi Japan. Good to have you with us. Maybe let's just pick up on the wage data that came through this morning. The fact that it is positive. Real wage growth is now sitting in positive territory. And people are saying that this paves the way or lays the foundation for the Bank of Japan to hike once more this year. What's your view?
So we do not expect any further hike this year because obviously the BOJ currently there's no need to lash the rates at this moment. But we do expect additional hike first half of next year. As you know, the economic indicator suggested that the wage increase is coming on the trend, and then also we see a very strong capex activity coming from private sector. So all in all, that suggests that the Japan macroeconomy is on track in the right direction. So the implication on Japan equity by a further hike by BOJ, in short term could be negative, but I think if BOJ managed to hike additional rate hike, if BOJ actually managed to have additional hike, that means the Japan economy is healthy enough to have additional hike. So, and ultimately that have the positive impact on Japan equity.
Yeah, I just feel like Japan, for so many years, for so many decades, we've been talking about the deflationary spiral. And yet now we are seeing inflationary signals. We're seeing real wages move into positive territory. What does this do for corporate pricing power and the fact that they potentially could actually start passing on higher prices to consumers?
It did. So I think it's the behavioral change that we've observed from Japanese corporates is actually they become more confident passing the pricing over to consumers, offering the better, product, better value for money. So I think the management is now more aware of the importance of margin rather than, top line growth. So even though we need to be, very careful how the consumption develops going forward, but we are very much optimistic about the corporate passing pricing to the customers.
When international investors look at deploying money into the Nikkei, how much of that is taking a view on Japanese equities versus taking a view on the currency if you're not currency hedged?
Well, I think, it depends the investment horizon, but I would say the Japan equity fundamental perspective is quite attractive, especially after the sell-off that we observed in August. The valuation-wise becoming very attractive. So the currency, it's obviously the yen-dollar movement in short term is volatile, and we do expect that the trend continue with that strong direction in the short term. However, I think, for the overseas investors right now, the fundamental perspective is great investment opportunity and mid and long-term perspective.
So what are the specific sectors that you're looking at within the Japanese index? And the reason is in the broader global markets the last couple of days, we've started to see some skepticism come through on semiconductors, on the AI supercycle. How is that impacting your view of where you want to put money within the Japanese index?
So within Japan equity, we still like value because there are still a lot of story related to corporate governance. But also we've been pretty optimistic about the domestic consumption side. So if finally we start seeing the real income turning to positive territory for the 2 consecutive months, and then also second quarter GDP showing that domestic consumption picking up. So we are more skewed to domestic oriented side of business. And then also we see very strong appetite for capex from Japanese corporates. So we are very much bullish on the companies who can be beneficially from this strong capex and a trend coming from Japanese corporates.
Yeah, makes sense. Hiromi Ishihara, Head of Equity Investment at Amundi Japan. Great to have you on, talking all things Japanese equities. Now, Ukrainian President Volodymyr Zelenskiy is set to nominate Andrii Sybiha to become the country's new foreign minister. This comes as part of the biggest cabinet reshuffle since Russia's invasion in 2022. The senior diplomat and former ambassador to Turkey is set to replace Dmitry Kuleba, who became the highest profile official to resign as part of Zelenskyy's reshuffle. So for more on this, Bloomberg's Russia economy and government editor Greg Sullivan joins me now. First of all, what is going on within the Ukrainian government? Why have there been so many resignations the last few weeks?
Well, what we do know is that Zelensky has said that he has wanted to take a new emphasis, both in domestic and foreign policy. For a while, there's been rumors that a reshuffle would be coming, and it appears that he's decided now is the moment. It is a critical moment for Ukraine. They're struggling to contain advances in the east that Russia is making. They are increasingly reliant on Western support to keep the government and the war function running. So in some ways, it's sort of a strategic timing for this, but he has long said that he wanted to take a new emphasis, and now it does seem to be the time.
Is this going to have any direct bearings on Zelenskyy's ability to keep a cohesive government in place? Because, of course, they're all focused on the war efforts versus Russia, but at the same time, it seems like they're spending a disproportionate amount of time just dealing with internal changes and personnel changes, resignations, reappointments, in addition to all of the corruption issues that people always talk about in the context of Ukraine.
Well, it does seem that Zelensky has a focus on making sure that his government is actually succeeding in what he wants it to set out to do. He's putting this clearly seasoned diplomat in a very crucial role for Ukraine because Western support is so important for them, both in terms of keeping the country running, but also in prosecuting their war efforts. Kuleba was perhaps the best known face outside of Zelensky in the wider world, so it's an important role. One of the advantages he has is that he's actually worked well with Zelensky's own chief of staff, so perhaps that will help solidify internal cohesion.
And will this have any implications on the war efforts themselves?
Well, again, it comes back to the Western support that Ukraine needs to prosecute this war effort, and clearly that role of the senior diplomat reaching out across the world to Ukraine's partners to try to secure the aid. And right now, Ukraine has been pushing for some tangible goals, the ability to use weapons inside Russia, to get more air defenses. So this is an important role and clearly something that he wants to buttress and fortify with this staff change.
Yeah, Greg, thank you so much for bringing us the latest. Greg Sullivan, Bloomberg's Russia economy and government editor. Now for a look at some of the other stories we're following today. President Biden is said to be preparing to block Nippon Steel's $14 billion takeover of U.S. Steel. The proposed deal has been subject to review by the Secretive Committee on Foreign Investment in the United States. Sources say Biden is said to be planning on killing it as soon as their referral lands on his desk. However, U.S. Steel has vowed to pursue all possible options under the law to make sure the sale is completed. U.S. Democratic presidential nominee Kamala Harris is calling for a 28% capital gains tax rate on people earning $1 million or more. She says a hike from the current 20% would ensure the wealthy pay their fair share. The new detail on her economic plans comes as Harris seeks to draw a contrast with Republican rival Donald Trump.
If you earn $1 million a year or more, the tax rate on your long-term capital gains will be 28% under my plan, because we know when the government encourages investment, it leads to broad-based economic growth and it creates jobs, which makes our economy stronger.
Coming up, China's president vows to provide Africa with $50 billion in financial support. We look at what she hopes to achieve with this aid next. This is Bloomberg.
The African story remains one of high inflation and volatility on exchange rates. So as an example, Zambia, that's a very stable country, had a 30% plus devaluation in their currency, and in June, right at year, and we had a 60% devaluation in the Angolan kwanza. So it remains the same. We're in a hyperinflation environment in Ghana, so not much has changed on the continent. If in local currency, the business is actually doing quite well. But once you convert to our reporting currency being rand, then all the money disappears.
That was the CEO of Africa's largest supermarket chain, ShopRite, speaking to us about the impact of currency devaluation on the business. Now, China's President Xi Jinping has vowed to provide Africa with $50 billion in financial support over the next 3 years. Xi also promised to strengthen military cooperation as China looks to deepen relations with the continent. The Chinese head of state laid out his vision during a speech to leaders from some 50 nations at the opening ceremony of the Forum on China-Africa Cooperation in Beijing. So for more on this, Bloomberg's chief North Asia TV correspondent Stephen Engel joins me now. Really interesting. We've been tracking this forum and some of the takeaways over the last couple of days, but it is notable that President Xi Jinping actually delivered a speech. What stood out to you?
Well, we all know that Xi Jinping has made this a cornerstone of his last 10 years as president of China. He sees, obviously, the lines of geopolitical dispute solidifying, and countries and nations and blocs are choosing sides, but he sees also that the global south, the so-called global south, from the Indian subcontinent through to Southeast Asia, South America, and the African continent, are a bit more non-aligned, and they've obviously been beneficiaries of China's largesse and its willing to lend. However, a number of countries did get into debt distress. I mean, Mr. Engelbrecht just talked about some of the issues through the pandemic as well that many of these African nations have faced with the devalued local currency and high inflation rates. So there's debt distress all across the continent. Xi Jinping is not necessarily, because he has a slowing economy right here as well, he's not necessarily opening up the checkbook as wide as, say, in 2016, when $28.8 billion of policy bank loans directly were sent into China, into the African continent. Now what he's proposing over the next 3 years is basically about $50 billion in financial assistance. And that takes many different forms, including a $30 billion line of credit to certain economies as well. So that military assistance, about $1 billion yuan, about 141 million US dollars as well, to train military personnel in Africa. He's also raised Africa as a whole to a strategic level with China. It's always been a strategic asset for China, but now he's raising it to strategic level diplomatically and economically. That's interesting.
Well, even the fact that there are 50 leaders gathered there listening to President Xi Jinping's speech tells you a lot about how he's thinking about the African continent. But from your conversations that you've been having with some of the representatives from Africa, is this help welcome? Because often, as is the case with Chinese lending, it does come with strings attached.
There are strings attached, obviously, and it's a bit opaque, the negotiation process as well. One thing that African leaders have told me, kind of on the sides of the conference, they essentially say, look, they don't necessarily come, I'm talking about the loans, they don't come with a lot of the restrictions that come from elsewhere, like environmental, human rights, and others. So again, I'm not trying to denigrate the amount of money that China has been putting in, but it is welcome. I talked to the foreign minister of Djibouti yesterday, and he essentially said that it's not an equal partnership. I mean, there is a trade imbalance, right? China is lending to cash-strapped fiscal governments in Africa. What we need, though, is that show of support. We need the path towards modernization across the African continent, and we need that pledge of cooperation.
Yeah. And from what we know, Stephen, have any new deals been signed?
Yes, there's been at least, well, several. The one was that stood out to me. It was done late last night, at least reported late last night, which we kind of knew about. It's about a rail link, essentially from Zambia to the coast through another country on the west coast. On the east coast. That was an old rail link that was signed back in the 1970s by Mao Zedong. But it had fallen a bit derelict. They need to upgrade it. So there was a signing ceremony there here in the Great Hall of the People last night. And that is also an interesting one because it kind of competes with what another rail link is being sponsored by the United States. And that goes from the Democratic Republic of Congo to the west coast of Africa through Angola. So, you know, clearly the United States and Western nations have sort of neglected the African continent, but they see as well, maybe they're playing catch up, that China has made significant inroads into Africa. Xi Jinping has been to Africa 5 times in the last 10 years. Joe Biden, Donald Trump, 0 over the terms of their 2 terms.
Wow, what a statistic. Okay, that's a good place to leave it. Bloomberg's chief North Asia TV correspondent, Stephen Engel, live from Beijing. Thank you. Well, coming up, Bloomberg has learned JPMorgan is set to establish a private banking team in Dubai. We have all the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg has learned that JPMorgan is establishing a private banking team in Dubai. The bank is joining rivals in deploying additional resources to the Middle East to capitalize on the thousands of millionaires flocking to the region. For more on this, Bloomberg's senior reporter for Middle East Wealth Funds, Matthew Martin, joins us. Matthew, I've got to say, I was pretty surprised to hear that JPMorgan didn't already have a private banking team in Dubai. I would have thought they did. But just talk us through this decision from JPMorgan and what has prompted it.
Yeah, well, look, I mean, I think what we've seen over the past few years is, the Middle East and the UAE in particular has done an incredible job at attracting wealthy people from around the world to come and base themselves in the UAE, in places like Abu Dhabi and Dubai, and that obviously combines with the fact that you've got a lot of local generational wealth which is transitioning down throughout the sort of family corporates. Plus, you've got these new millionaires who are coming into the region and basing themselves there. And so this, I think what we've seen is the banks are increasingly trying to target this group of customers because they know that they're very lucrative customers if you can crack those. But it's also a very, very difficult market, and it's been in the past has been dominated by a few of the big foreign institutions, and now it's much more up for grabs. And so we've seen banks like JPMorgan doing this now. We've seen HSBC putting a big push into this wealth space in the region, as well as others like Deutsche Bank and UBS, all trying to build teams in the Middle East to try and target these affluent customers.
And I just wonder how setting up these private banking units complements their other big pushes in the region with asset management, investment banking. It just feels like there has been a push from the part of these international investment banks to beef up their presence here.
Yeah, I think that's absolutely right. And, I think when you see the wealth management teams, they're coming in and they're also helping, build off the back of the bank's operations, helping the corporates, the family business, the family offices or startups that have been started here. That's been a big push. And as those companies are growing and are raising money and are getting ready to IPO, then, the banks are coming in, they're saying, we'll advise you on your corporate financing, and then also they want to be able to come in and say to these founders and these people who are generating a lot of wealth in this region, not only are we going to do the deals for your company, we also want to do the deals for you personally and have you as the individual as our customer.
Yeah, 360 treatment, 360 degrees treatment. Matthew Morton, thank you so much. Always good to talk to you. Bloomberg senior reporter for Middle East Wealth Funds. Quick look at markets. It is leaning towards negative, but not as bad as it was a couple of days ago. All of the majors are seen opening up in the red. Euro Stoxx futures down about 0.2% as we head into daybreak Europe. But that was it for Horizons Middle East and Africa. I'm Jemana Bersachi in Dubai.